All right, crude oil trading near a two-year high, a little bit more than $91 a barrel for crude right now. And of course, coming off a little bit because of concern over economic growth and the news out of China that they are raising interest rates to deflect inflation. All right, joining us live from Houston, Texas to discuss the oil and energy markets, we have Carl Larry. He is the president of Oil Outlooks and Opinions. Carl, good to have you with us on Bloomberg.
Hi, thank you for having me.
All right, so Carl, you know, if Santa was going to be a giver or a taker of oil right now, you think that he would be selling or buying? I mean, is oil going to continue to rise above $91 a barrel?
I think it will. I think we're all kind of looking for that $100 mark in sometime in the new year, probably in January. But I think there's still enough signs for economic growth and supply demand that they're going to kind of push it back up to $100. Once we get there, though, that's a major question, what we do there.
All right, but you talk about supply and demand, and Adam Johnson was coming to us from the Bloomberg newsroom and looking at demand, showing that it was falling, but in the United States. So does this mean that we have to kind of look outside the U.S. for all of the clues as to where oil prices are going to go?
I think so. I think, when you look at China, especially Asia and that whole region, I think that you're seeing stronger demand than we have had over the past few years. And that's the thing with China. Everybody says that, growth isn't as big as it has been, but, every year it's more growth, and every year they just keep adding on. So that number will continue to grow going forward, and that just puts a really tight collar on supply.
All right, so if it puts a tight collar on supply, are there any areas of the market that you'd be focused on to put capital into? Who's going to profit from all of this?
Well, I think your diversified petroleum production companies, companies that have a little hand in oil and a little hand in gas also. I think we might see a little bump up in the gas demand going forward, especially if we see industrial production start to pick up. I mean, growth needs to keep going, and sooner or later we're going to see that turn around.
Now, Carl, if you take a look at what's happening in the natural gas market, new technology being used to extract natural gas from shale plays, is that going to be a profitable area for investors?
I think at worst case it'll be a stable area for investors. I think that we'll see demand grow, we'll see industrial production pick up, and we'll start seeing that usage going forward. Right now the winter weather is a little bit, it's cold, but we're not seeing that strong gas demand we have had in past few years. And I think that's a lot because of the shale supply. But, granted, the economy is the key here. Seeing continued growth and some continued strength is where we'll see these oil and gas prices continue to rise.
All right, Carl, look a little bit east for us from where you are in Houston. Look at the Gulf Coast right now and tell us what's going to happen to supplies there, because it has to do with a tax deduction that the many oil producers, particularly the refiners, are going to be able to take in 2010 that they're not going to be able to take in 2011.
Yeah, we'll see supply start to draw down abnormally from what we normally see, from past few years. And what they do is they move that oil out for tax purposes. Last in, first out is the basic idea. But regardless of that, demand the last few weeks has been pretty strong. We've seen high refining margins for products such as diesel fuel and gasoline, and that's caused a little bit higher crude runs. So we are kind of using a lot of the oil that we're seeing missing. Although we're not seeing a lot of the oil that's missing used, we should see that continue at least into the next month or two.
Carl, what about increased costs having to do with government regulation related to the disaster that happened in that BP Macondo well in the Gulf of Mexico? Will oil get more expensive to explore for?
It will, and that's going to be a big issue going forward. We're going to have to see how much it's going to cost, what those production prices will be going forward, and that could put a little bit of a strain on the price of oil. We might see some pressure from that, but definitely that demand, plays right in that picture. The more we need and the more expensive it is to produce, the more restrictions we have on it. It's going to be a tough road ahead trying to keep things stable.
Carl, words coming out of Saudi Arabia today and this weekend having to do with oil prices, saying they'd like to see them anywhere from $75 to maybe $85 a barrel because, well, if people are hooked on oil, they don't necessarily want to drive people away from that energy source. Any thoughts on the supply of oil coming from OPEC?
Sure. Let's just take a look back here to 2004, 2005 time period when OPEC was saying that crude oil should be between $28 and $32, and it was trading at $50, $60 back then. I think their status quo right now is to try and keep things calm, and we don't want to incite a panic, but oil prices between $80 and $95 are probably going to be the new norm, and I think that will ease into that, and as soon as they see that there's not a real big, scare from those prices, they'll kind of move their band a little bit higher too.
Carl, what about the investment coming from Mexico. They've got to expand Pemex and increase oil production. Is that likely to happen in 2011?
I think we'll see definitely an increase in production down there. I think what Pemex is looking at and what the rest of the world is looking at is not only the growth in Asia, but we're also looking at the growth in Latin America. Brazil's, hot on the tail of growing their economy easily into the top 5.
We've got to leave it there. Carl Larry coming to us from Oil Outlooks and Opinions in Houston. Thank you very much.